right, welcome back to Market Sense. In our House View segment, starting today, Tina will visit the top brokerage houses and get you insights from the top minds in the world of financial investments. Joining us today to speak about their house view of Motilal Oswal AMC is Taher Badshah. 18 years of work experience, buy side, sell side, he's done it all. Let's just get him in to speak about what he believes the market is likely to do in the near term and of course over the medium term as well. Taher joins in. Taher, good having you. Thanks so much for joining in today. Lots has happened, Taher, over the last week. Two key macro events out, one key technical event up ahead in terms of the expiry. How do you expect the near term to behave like?
Yes, you're right. We've had a very good roller coaster ride, and I think near term we are probably going to be slightly under pressure, but still range bound. Very near term, I don't really think we are going to probably breach maybe 5,700 on the Nifty. So I guess it's a situation where the band probably of the Nifty is moved up from more like 5,500 to 6,000 is what we were swinging between, to more like 5,700 to 6,000, 6,100. That's where I see the market near term.
Good afternoon. We suddenly heaved a sigh of relief at the fact that the Fed did not taper and has postponed the same. And as the FI flows are continuing, do you think that lingering fear does remain at the back of the minds, and how do you expect the FI flows to continue?
Yes, that's correct. We've not had enough clarity from the Fed with regard to when tapering would begin, but clearly there is a sense that it could begin sooner than expected. So to that extent, we are probably even flows are going to remain a little more challenging from the point of view that Fed could taper in the next 3 months or before the end of this calendar year. So it's going to be patchy in terms of flows, but I believe that the rupee will probably be a little more range bound now. Simply because of the fact that the recent move to closer to 68, 70 levels has also illustrated that there seems to be some appetite of either portfolio investors or long-term FDI flows to come in for the rupee at those levels. So there is some buying appetite of the rupee at those levels, and there are certain other measures which have been put into place by the RBI. We've also seen trade figures look a little better. Trade, especially exports, start looking up a little bit. So all that will probably hold the rupee and in a more range bound, in a more range bound a level which probably be in the vicinity of around 63 to 66, and that's also a reason why I believe that the markets will probably be a little will remain volatile, but probably in a slightly higher band of 57 to 6,100 versus the earlier 54, 55 to 6,000, 6,100.
Taher, banks have taken a battering post the RBI action, warranted, unwarranted, and if warranted, is there more downside by virtue of what the stance of the RBI could be in the upcoming few months?
No, quite warranted, I would think, because clearly the indication is that the rates are going to tighten from here on as well, even after this 25 basis points hike in repo. And we could probably, therefore, the focus of the RBI clearly seems to have shifted to inflation control, and then probably being exchange stability. Growth at best will come third in the overall RBI scheme of things for now. So clearly that's something which the banks will start pricing in, or banks will have to start pricing in. Besides, banks are running with nearly about 80% on the credit deposit ratios, which is clearly on the higher side, and therefore capital adequacy and capital stress is likely to set in very quickly, especially for the PSU banks. So given that, plus the fact that slightly higher uptick in interest rates also means a little more modest further slippage in NPAs, and that is something which will weigh on banks for the time being. So banks will probably see a little bit more correction, especially after the recent rally.
What do autos do? They haven't really corrected as much as banks and maybe real estate has. Do they stay well?
Yeah, so the volatility in autos has perhaps been a little lesser than that in case of banks. Besides, there will be a little bit of hope of the festive demand likely to probably help some of the auto names. So it will perhaps be a little less volatile than the banks, but yes, clearly, I mean, even they have moved up recently, so some bit of correction and pullback in those stocks is not unlikely. There may be one or two stocks which perhaps might stand out because of the segments in which they operate or the markets in which they operate. And those may probably go against, but otherwise I think autos as a pack also is likely to be a little weak.
Great. Out of time completely on this show, Taher, but great having you. Thanks so much for taking the time out and giving us your and your house view as well. With that, it's a wrap on this leg of Market Sense from Avan and myself. Thanks so much for watching. Markets at Lunch takes the action forward. Ayesha and Sandeep would be coming in to speak about it.